All right, guys. You're welcome to today's meeting. We had to start a little bit late because I wanted some of you guys to be ready for what we're about to share today. All right. It promises to be an amazing session, and of course, like every other session that we do have, the goal is to educate. All right. This is strictly an educative property. All right, this is strictly for educational purposes. All right, so today we are going to be discussing something very important. I've had a lot of questions from traders who come to my DM to ask me questions like, how do I scale up my trading portfolio? From how do I go from doing $100 to $500 to $1,000? How do I go from trading a small account to trading a large portfolio? All right, it has never been easy like it is in our time. So in our time now, I don't think there is any excuse for someone not to succeed trading. All right, especially if you have done your homework. There is so much access to so much equity available. All right, and then you can do so much if you understand how to really go about it. Okay, if you understand how to go about it. So if you're on this meeting and you're hearing me and you're getting me clearly, I would like you to just comment in the comment section that yes, you're hearing me and we can proceed. Please help me do that. Make sure you like this video, make sure you share the video. All right, make sure you like, make sure you share, and you can just comment in the comment section. Just drop a fire emoji on the comment section. Drop a fire emoji on the comment section. That way I'm going to know that we're good. All right, I'm seeing some of your comments. Somebody is asking me, what do you think about the 5% prop firm? Well, I'm not going to talk about any prop firm today. Unfortunate enough, I'm not here to do prop firm review. All right, the prop firms that you see me review on my channel are the prop firms I have verified by means of either partnering with them or I've traded with the firm. All right, so and I feel it deemed fit to do a review of that firm. That's why I do what I do and post it on my channel. Okay, any prop firm you see me review and put on my channel, and just know that that prop firm, as at the time I did that video, were actually working very fine. Otherwise, I have no business doing that video. I have no business doing any promotional video for any prop firm except that they are verified and credible. Okay, I think recently I found out about the 5% prop firm. I've seen it. All right, and I went through their rules and regulations, but I really didn't take out. It's not something I have done a review on. Okay, is SMC strategy also applicable to swing traders? Well, that's amazing. It's an amazing question. Smart money concept isn't just for swing traders, but even position traders, irrespective of the personality of the trader. Smart money concept, the true smart money concept, makes provision for day traders, intraday traders, swing traders, short-term traders, and position traders. Okay, irrespective, and even scalpers. If you are doing scalping, there is provision for you in the true smart money concept, okay, as taught by the founder of the smart money concept. So today we are going to be looking at, I don't intend to keep us longer than expected. In fact, I don't intend for this meeting to stay longer than 30 minutes. So I'm going to be very specific. All right, I'm going to address the things that we need to learn as traders. Recently, I had the privilege to observe some trading performances of some traders who were actually good traders, and I really started to see why many traders will be in a negative curve for a long period of time. All right, until they learn to change the things that they need to change, they will not start to see the results that they desire to see. Okay, many people are willing to learn. I said this to my group of students, my VIP mentorship students. All right, All right, somebody is asking, how much is your course in Nigeria? My course is actually just $100. That's 74,000 naira. Okay, maybe you should check some of the videos on the channel. You would see one of the links where you can reach my private WhatsApp so that you can just get enrolled with the admission team. All right, they are going to get you enrolled. Once you make payment and it's verified, they will get you enrolled. You have access to the course and you have access to the VIP mentorship community. All right, so many people are willing to learn, but only a few people are truly willing to change. And until you desire to learn and go beyond learning and transcend to changing, which is literally transformation, you are not going to see the results that you desire. All right, now why did I say that? I see a lot of traders who go on to do things contrary to what their mentor has taught them. All right, the purpose of mentorship is to offer or to provide you the proper guide on what to study and how to go about trading the market until you have some level of trading consistency, especially consistency in profit. All right, until you start to see that result, leveraging on somebody else years of research and analysis, years of strategy development, okay, years of experience to be able to couple a system together. You don't have the right to start doing your own thing. So if your mentor says do this, why do you go about doing your own thing? It's the reason why many traders are not going to scale up. Okay, you allow emotions to drive your trading. All right, your trading performance, you allow your greed to intrude in your trading performance, and you can't even understand yourself. Okay, so today we are talking about how to scale up your trading performance. We had the first series the other time, and this is the second episode of the scaling up your trading portfolio. All right, and today I'm just going to give detailed steps and procedures on how you can go about scaling up your trading portfolio. If you are tired of where you are, it's possible. Nothing is impossible. Impossible is actually a lie. All right, limitations are only possible when you accept them. That's the only time limitations become reality, when you accept them. Okay, so how do you scale up your trading portfolio? The first thing you need to do as a trader, either a forex trader, stock trader, equities, bonds, or commodities trader, irrespective of the asset class that you are trading, the first thing you must solve as a trader is that you need to have an edge. Okay, you will come to discover over time that equity is not really the problem of many traders. Initially, we thought that equity was the problem, but along the line, even if they give you the equity, if you don't have an edge, you are going to end up blowing people's money. You are going to end up blowing the capital. Okay, and you are going to lose all of that, and you will not be able to do anything significant. So I have come to the conclusion that truly it's not really equity or capital or funding that is the major problem of traders. The major problem of most traders is that they are unable to identify a working system, all right, that has been proven over time to have a level of results that can attract a level of consistency. That's what we call an edge, something that is proven, something that has the ability to reproduce the same result again and again on account of an understanding. All right, it gives you the advantage. That is what an edge is. All right, if what you know is not working, don't argue, simply go back to learning. It simply means that what you know is not sufficient enough to produce the level of results that you know. It's as simple as that. There's no gimmicks around these things. All right, if what you know is not producing the level of results that you desire, it simply means that you don't understand that thing sufficient enough to produce the level of results that you want to see in your trading performance. Okay, so how do we master an edge? Number one is that an edge, there are certain things an edge is supposed to have. A trading edge must have. There are certain things a good trading system must have. Okay, once you are able to solve these things, then you can proceed to the other stages of our discussion. Okay, so the first is that an edge is supposed to have a specific principle or specific rules for entry. An edge is supposed to have a specific rule or principle for executing a trade. Okay, for executing a trade entry, your edge is supposed to have a specific rule. What is that one rule that you must see to qualify a buy or a sell model on your account? You should be able to write these things down in your trading journal. Okay, how do you come about these rules? Number one, you must know when to enter a trade. You don't just wake up any hour and just because you feel you want to meet this profit target, you just start executing trades. That's madness. That's crazy. All right, so you must be able to clearly define when to enter a trade, how to enter that trade, because even when the when is ready in terms of time, we need to know how. All right, that's why time and price is truly a major determining factor in trading success. Timing and what? Price action. So when to enter, are you in the right time to execute a trade? You need to know that. All right, if the time you want to execute a trade has no volatility in the marketplace, it's really nonsense. You are going to execute a trade and it's not going to give you anything because the timing is wrong. So identify when to enter. That means you have to study trading sessions and know what trading sessions work best for the country that you dwell, what trading session work best for the currency pair that you are trading. All right, you cannot be trading GBP USD and you are looking to execute a trade in Asian session. Are you okay? So when to enter, how to enter is price action. What structural formula, what structural formation must you see on the chart to qualify a buy or sell entry? Then why? Exactly why? Why do you want to take that trade? There must be a why. If you can't answer these three things, when to enter, how to enter, why to enter, just leave it. It's not a trade. Okay? Your trading edge must have rules for exit. As good as rules for entry is, you must also have rules for exit, because that's how people give back profits to the market, because they know how to enter a trade, they don't know how to exit. Yes, you know how to enter, but you don't know how to exit, and that's terrible. All right, if you know how to enter a trade, you must plan how you want to exit. And the same way you defined your entry rules, that's the same way you must define your exit rules in terms of when to exit. Is the timing already closing? Is the session closing? If it's closing and you are day trading, you don't have to keep your trade running, you can simply just closing. Is it Friday and price is about to go into the weekend, the close of the markets? You need to know these things. So when do I exit? How do I exit? All right, what criteria must I see to exit a trade? All right, should I see an opposing break in market structure to the opposing trend to know that the market trend has changed before I exit? Or should I see price trade into whatever it is? Just define it. All right, I'm not here to teach price action. And the last is why you want to exit. Why do you want to exit? Really, answer these questions. All right, you must answer what? These questions. So the second thing you should master is, I discovered that most traders really don't have a problem with the technicals as well. The only issue is that they have a problem with their personality type, simply because they don't know themselves. They have not studied themselves enough to know that my personality cannot hold a trade for more than 1 day, 2 days, 3 days because of your personality type, and there's nothing wrong with that. Over time, you can transcend and build your personality, do personal development and develop stature to be able to hold trades for more than 2 days, 1 day, 3 days, and even weeks. Okay, but as a starter, you need to know who you are in terms of patience. Are you patient enough to hold a trade? So you need to solve personality issues, study your personality, know who you are, and be comfortable with your personality. Personally, I feel comfortable doing day trading because my personality doesn't work better holding trades over days and even weeks. I don't feel comfortable doing that. All right, so I resolved to doing what? Day trading. And again, day trading is not everyday trading. You need to know that as well. So master your personality as a trader. All right, then you need to create your trading routine. Most traders don't have a trading routine. What do I mean by creating a trading routine? You must be able to specifically say that I'm only going to trade during New York session or London session. All right, New York or London. Sorry guys. So you must create that trading routine. You need to identify the times, the days that you want to execute a trade in terms of routine. All right, in terms of routine. I know of traders who say that they don't trade on Mondays. That's their trading routine. They don't want to execute a trade on Monday. They like to trade between Tuesday to Thursday, and that's all. Some traders like to trade Asian session, some London session, some only New York session, some London and New York. You need to define that as well. All right. So because you need to know these things. Once you know these things, it's going to give you a professional perspective of trading. You don't just wake up anytime and you want to execute your trade. No. You must have a routine for trading. Personally, I only have two routines for trading. The first is London session. The second is New York session. All right. And the standard London kill zone is usually between 2 to 5 a.m. New York time. You convert that to your local time. That's London session. That's when I like to look at the markets to see if there is a potential trade setup or not. 30 minutes to the London Open, I look at the charts, and 30 minutes to the New York Open, I look at the charts. All right. Please, if you are hearing me, I need you to just type in the comment section. Give me an emoji. If your best or favorite emoji, just drop it in the comment section. Let me know that we are catching up, because I'm seeing some comments here. Some people are having network issues. All right. So let me know that we are together. Good. I can see your comments. Keep it coming. All right. Interesting. So, create your trading routine. That's the second thing I said, or the third thing I said, right? First is you must master your edge in terms of rules for entry, rules for exit. We are still talking about edge. All right. Mastering your personality as a trader. Then the third is create your trading routine. Do you wake up Asian session to execute your trade? No, it depends. If the pair you are trading is an Asia related pair, all right, you can do that. But if it's in London or New York, create your trading routine. That's what I'm trying to emphasize. Then the next is you must be able to pick out one pair as a beginner trader who wants to scale up his performance and trading portfolio. Pick out one currency pair or one asset, and at maximum just 2 assets. Now, research has shown that most traders who go on to become successful and scale up their trading performance and portfolio are traders who resolve to trading very minimum number of pairs. They are not doing too many pairs at a time. They are either focusing on one currency pair or asset, or at maximum 2 currency pair that are interrelated, so that intermarket analysis gives you a clear insight on the pairs that you are trading. Now, how does a trader go to trading? For example, GBP USD, then you are executing on Euro AUD, then you are executing on USD ZAR, then you are executing on GBP JPY at the same time. At the same time, these pairs are not interrelated. One is a cross pair, one is a major pair, one is an exotic pair you are trading, and one is a minor pair. So I'm wondering, so when you see traders execute all of these trades at the same time, and you're like, really, you think you can have that level of focus to focus on all of these trades and not have your psychology affected? It's not going to be possible, guys. All right. You may be lucky. Maybe a lot of times you may be lucky, but you will not scale up that way. You will not. All right. Even hedge fund managers, I took out time to study about the 30 most successful hedge fund managers in America. Most of them trade just one asset, and at maximum 2 assets. Okay. So focus on just one currency pair or one asset. All right. And at maximum focus on just two currencies or 2 assets that are interrelated. All right. If you are trading two pairs, then make sure they are interrelated. Please make sure that they are interrelated. Then the next thing you should do is you must master risk management. Now, people don't talk about these things. They don't solve these basic foundational issues. They just go on to take capital or funding without solving these foundational issues. But you are not going to succeed that way, because if the foundation be destroyed, what can the righteous do? Absolutely nothing. Okay, let me share this with you. Recently, I had a conversation with a trader from the United Kingdom who lost about £38,000 to trading. Literal money she funded, and she lost that amount of money. And when I asked this trader, all right, who is your mentor? What course have you taken? I was shocked to hear that she was only 3 weeks in the trading industry. Just 3 weeks in the trading industry. No mentor, no training. You went on to fund $30-something thousand without understanding risk management, without solving foundational issues, and you bleed the amount of money. And I said to her, don't trade, avoid trading, leave the charts, go and look for a mentor, pay that mentor to teach you something that works. My auntie no here, my auntie no here. All right, so you see how stubborn people are. People are willing to learn, but most people are not willing to change. Somebody is asking me questions that are not even relevant to the things that I'm talking about here. All right, so risk management is applicable on all assets. Please take note on that, whatever you are trading. All right, so master your risk management strategy in terms of understanding your risk to reward ratio. You must know what you are risking, and you must know what you are risking, and you must know what you are targeting as a reward. Know what you are risking, know what you are targeting as a reward. Most traders trade without having a specific plan for their risks and reward. So if I'm risking 1% on a trade, as a day trader, I like to take profit or partials at 3% reward or 5% reward, because in day trading, a risk reward ratio of 1:3 to 1:5 is absolutely amazing. Okay, it's absolutely amazing. So understand your risk reward ratio. What are you willing to risk comfortably? Are you willing to risk 1% of your account every time you execute a trade, or are you willing to risk 0.5% of your account to get 3% of your account? That is 1:3 risk reward. If you are risking 1% to get 5%, that is 1:5. So understand what you are doing, please. All right, then study your strategy. All right, study your strategy using hindsight study and back testing, just to understand study your strategy in terms of insight and back test, so that you can understand your strategy win rate. Okay, when you are talking about risk management, there are key things that form the foundations of risk management. Number one is that you must understand what is your strategy's win rate. So for a bad strategy that has a 30% win rate, all right, on a series of 10 trades, and when you use a risk reward ratio of 1:3 and you lose 7 trades and only win 3 trades, you should be able to add up 2% on your account. With a bad strategy that has only 30% winning rate. 30% winning rate in 10 trades means that you're only going to win 3 trades and you're going to fail 7 trades. So if you have 7 losing streaks and only have 3 winning trades, you should be able to add 2% on your account with a 1:3 risk reward ratio. Okay, so another question most people ask is, how do I know the lot size to use on the account I'm using? I'm going to give you a simple formula. The formula is multiply account equity, right? Account equity AE multiplied by the percentage you are willing to risk all over the number of stop loss you are using on that account. If your strategy says you should use a standard of 20 pip SL, then you should put 20 pip stop loss. All right, then this is going to give you micro lots. Then you divide micro lots by 10, is going to give you standard lots. It's as simple as that. Or another simple way to do it is to go to babypips.com and look for lot size calculator. Then it's going to ask you to put the details of the risks you want to take, percentage risks in terms of, and the lot size, the percentage risks and the equity you are trading and the currency pair. It's going to give you the specific lot size to use per percentage risks. I think that's really okay. Then the next thing is trade management. All right, this is very important. Most traders talk about strategy, technicals, risk management. They don't talk about trade management, because as good as all of these things are, how to manage your trades also are very important. It is lack of proper trade management that makes a lot of traders give back their profits to the market. You were 90 pips in profit, you didn't take out anything, no partials, no profit, no trail stop, no break even. Price returned back and took you out and you had a loss. That is poor trade management. So a simple formula for trade management is this: when price is 25% in your direction, when your trade is 25% in profit, reduce your stop loss by 50%. When price or when trade is 25% in profit, if your target was 100 pips and you are 25 pips in profit, reduce your stop loss from that's your 20 pip. For example, reduce it to 10 pips. That is 50% reduction of what? Risks. You have reduced or minimized risks by 50%. When trade is 50% in profit, you should do what? Break even. Your stop loss should come to break even. Please. Once your trade is 50% in profit, you can do break even, no problem. Then once your trade is 75% in profit, your stop loss must be at 25% trail stop. Trail stop means that you will shift your stop loss to 25% profit. So if your target was 100 pips and you were 75% in profit, you have no reason to keep your SL 20 pips below. That's craziness and poor trade management. At 75 pips in profit, that is 75% profit, you should bring your stop loss to what? 25% in profit. That means you will close 25 pips. Shift your SL to 25 pips in profit. This is trade management. All right? I guess that's it, right? Then, that's how trade management works. Okay? So, what's the next thing again? The next thing is, then this is where, when you have solved all of these things, you've mastered rules for entry, rules for exit, personality problem, okay? You've created a trading routine, all right? You've picked a currency pair you want to trade, one or two. You've understood your risk management strategy in terms of risk reward and in terms of understanding your strategies win rate, all right? Then you understand trade management. By this time or at this point, you're already a professional trader, because this is how professional traders think before they start to manage large funds and become hedge fund managers and big portfolio traders. This is the only time you should think of scaling up your capital. All right? I just hope this is making sense. If it's making sense, please type in the comment section. Give me a fire emoji. Let me know that I'm making a point. All right? Let me know that we are really progressing. Okay? Then the last part of this is that save money or fund a small account. Trade that small account gradually. The first thing you should do when you get funded, either by funding your account with personal funds, all right, or by doing equity crowdfunding, all right. I'm telling you the ways you can raise funds now. Number one, personal funds. You can fund your account with personal funds. Number two, prop accounts, prop trading, so prop firm trading. Number three, equity crowdfunding. I don't really advise people to go for this if you don't have a structural system that is really very structured. Don't go for the third option. Just do personal funds or prop firm trading. Okay? Now, whenever you get any of these accounts, the first thing you should do is to give yourself a target. every month I'm only going to do 5% of my account equity or 10% of my account every month. This is how to go about it. Please, that's how professional traders think. You don't go about thinking 100% monthly. The only reason why your 10% is not making sense is because of the equity you are trading. And the only way you will scale up your equity is when you master trading these habits. When you master these things on a small account, you can literally replicate it on any account. If you can do 10% consistently on a $100 account, by the time you get $1 million, it's going to be very, very amazing. You will appreciate what you get as 10%. All right, so simple way to do this is create a profit target for on a weekly basis and on a monthly basis. What is your weekly profit target? What is your monthly profit target? Okay, so on every month I want to do 10%. Every week, that means if I do 3% every week, at the end of the month I must have done 10% plus or minus 2. That's okay. It's really, really okay. All right, that is very okay. Now, if you are doing prop accounts, from your first withdrawal, don't spend that money. Remove money and buy another prop account. Okay? And then if you are going the prop firm trading direction, start small. Please start small. Most people are psychologically okay trading a small account, but they are not psychologically ready trading a big account, and this is an issue. So don't be too quick to start big and lose the account. You're going to be emotionally affected. So start small. Start with a 25K account, all right, or $50,000 account. That's all right. So once you pass, you get funded. Once you do your 10% profit, a monthly profit target, you've gotten your profit share, then you can now buy a 50K account. If you started with a 25, if you started with 50, you can buy a $100,000 challenge. You scale up that one, you've gotten funded. If you do any withdrawal, you can scale up and do $200,000. Patiently growing and gaining experience. From that point, you can multiply, and get yourself funded with at least $400,000 or $1 million in funding. Depends on your financial goal, depends on what you want. Then, as you are trading prop firm accounts, all right, have a specific goal to build your own personal funds, because that's the only way you are going to enjoy the benefits of compound effects, and you will grow faster when you enjoy compound effects. Okay, when you implement the compound effect rule, you will grow faster. So if you grow or if you build a personal equity of $200,000, personal equity, this time around it's personal equity. It's not 10% maximum drawdown, it's your equity. Then you can give yourself targets. I want to do 100% in 4 months as a trader, or 3 months, or even 2 months, it depends. 3 months, 4 months. Don't forget, you are still trading prop accounts. That's where you are generating income to fund your personal trading wallet or account. So you can increase your risk appetite on your personal funds. All right, this time around you can do 50% in 2 months, or 50% in 1 month, or 50% in 3 months, or 100% in 3 months. Depends. By the time you do 100% of a $200,000 in 3 months, patiently, guys, your equity will be $400,000 in funding. This time around, the same principle, you are going to do another 100% in the next 3 months. Don't forget, you are not doing 100% of $200,000. You are doing 100% of $400,000 this time around. So in the next 3-4 months, you still replicate another 100%. The same principle. The only thing that changes is your lot size, but the risk appetite is the same. It's 1%, 1%, 1% risk, 1% risk, or 0.5% risk every time you take a trade. It's the same. The lot sizes will only increase because of the account equity. Do you understand? So by the time you do 100% in the next 3 months, your equity becomes $800,000 in funding. Give yourself a target. I want to do 100% in the next 3 months or 4 months. All right? Guess what? Just by trying to do 100% 3 times, your equity becomes $1.6 million in funding. That's an easy way to scale up. What is the difference between Going this way and going the prop firm way, the simple difference is the compound effect, benefit of compound effect. On prop firm accounts, you can't do compound effect. Once you meet profit targets, they would like to take their profit split, so you have to withdraw your profit splits too. So the best way is to withdraw your profit and fund it into another trading account so that you build your personal account, whether 10K, 20K, 50K, 100, 200K, whatever account you build, now you can enjoy compound effect. Compound effect. Every time you make profit, your equity and capital, when you match them together, they become equity. Equity becomes bigger. All right? Once the equity becomes bigger, the same principle, once you do it again and again, you see that because of the compound effect, you are going to grow very faster and grow very, very, very rich. All right, guys, so this is very interesting. This is the little I have that I want to share with you guys today. All right, we've spent about 36 minutes on this live stream, and I don't intend to really take a lot of time on this meeting. All right, so this is really this is very, 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 very amazing. If you apply these principles, you are going to see a paradigm shift in your trading. So if you are struggling with any of these things I mentioned, whether the entry, exit, personality, creating a trading routine, understanding timing and price, understanding risk management, understanding trade management, understanding how to go about all of this, all right? Well, if you are having a problem, maybe you can enroll for my VIP Forex course and mentorship so that you can have access to my Forex training course and access to our VIP mentorship community. You get to see a community of students who are also like-minded and are growing patiently and are doing these things very, 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 very passionately. All right, I hope you learned something new on this video. All right, we are creating a course very soon. It's going to be very amazing. We are going to be doing a bootcamp session with only our VIP students and the traders who get to join our VIP sessions, our VIP Forex community. The only criteria is you have to take our Forex course. Once you take the Forex course, you join our VIP mentorship community. We are planning a 3 days bootcamp. It's going to be purely institutional trading concept bootcamp. All right, if you are doing smart money, you are going to learn smart money the right way. Okay, so somebody is asking, when do we make withdrawals to pay ourselves when taking a profit challenge and fund your own account? See, guys, I only said withdraw profit and fund your account. I didn't say withdraw all of your profit. If you withdraw all of your profit, you can take out something out of it, save something out of it, of course, and then fund a portion into of that profit into your personal account and grow it patiently. Please grow it patiently. All right, so that's that. Until next time, I wish you good luck and good trading. Stay safe.